On February 20th, 2020, the stock market crashed, and if you had been investing during the lows of that time, you could have multiplied your wealth. Sadly, the past is the past, but today I'm going to educate you on why the opportunity to build generational wealth is right around the corner for you. What is up, everyone? I'm eMoney, and welcome back to the eMoney channel, where we talk about personal finance and building generational wealth. If you enjoy videos like this, please make sure to like, subscribe, turn on those post notification bells, share the video. It really lets the YouTube algorithm know that this content is useful to you and other people like you. So the first thing I want to establish when we're talking about this subject is that this is not a get-rich-quick scheme. This takes time, it takes patience, and it takes trust in the process that has been proven over several years of markets. Before we get into talking about what commodities are good things to invest in, first we need to understand the process of investing. So the first thing we're going to talk about when it comes to investing is compound interest. So basically, simply put, the way this works is, say you have $100 and you invest $100 every week. That $100 is going to keep building on top of itself. It's going to go from 100 to 200 to 300, but on top of that, you're also earning money in the market. So you may earn 5%, 10%. That 5-10%, it gets added onto your $100, $200, $300, $400, and it compounds on top of itself. Setting a schedule for when you invest is very important with this strategy because, remember, we're not trying to beat the market, we're trying to build wealth over time. The earlier you start with compound investing, the more exponential your returns can be. If you're watching this video, then you likely have heard the term buy low, sell high. And basically what this means is when the market is in a state of recovery or it's hitting its bottom, that's where you want to be getting your positions so that you can later on sell for a profit at the high. In 2023, there's a lot of technological advancements happening in the world today, starting with AI and cryptocurrencies. Right now, the media is filled with videos and stories talking about how inflation is high and how that interest rates are being hiked, and tech is actually something that is deflationary. So these are the assets that you want to get into at this time. So when I say that we need to get into tech and invest in that sector, I'm not talking about going out and picking your favorite penny stock. We need to invest in the market as a whole. One of the best ways to do this is to get into an ETF. In simple terms, an ETF is basically just a broad market stock that includes other stocks inside of it. So an ETF may include stocks like Apple, Microsoft, Intel, and they're just all packaged into one, so you don't have to go out and individually buy these stocks. Another added benefit of having an ETF is that you're not relying on one stock to perform well. So say two of the stocks in your portfolio perform really well and one has a really bad day, you can still gain on that day even though that one stock didn't perform as well as you would like it to. That being said, let's talk about technology entering the finance space through crypto and AI. And we're going to be using the history of the asset to see if it's something that is worth investing in. So typically, Bitcoin behaves in 4-year cycles called halvings. During these halvings, the supply of Bitcoin is decreased. And if you know anything about supply and demand, you know that when the demand for an asset goes up and the supply goes down, that means that there's going to be appreciation in price. In the past, during these halvings, the price of Bitcoin has exponentially increased due to the scarcity of the asset. This constant decrease in supply and constant increase in demand makes Bitcoin the perfect hedge against inflation. This is something that big institutions know and why this cycle is very different from others. There are a lot of big companies and fund managers, investors interested in the crypto space, such as BlackRock, Fidelity, and these people are market movers. They don't just get into assets. This is why it's imperative for the average person to start accumulating Bitcoin, because once these large investors and institutions get in, it's going to be way more scarce than it is now. Obviously, there's a lot of headlines about how Bitcoin fluctuates a lot and that it can move. But if you look at Bitcoin over the long term, you can see that it has been steadily increasing and the trend is very likely to continue. Now, obviously, I'm just some guy on the internet, so do your own research. But to compare, if you look at the adoption of the internet compared to the adoption of Bitcoin, the adoption of cryptocurrencies is just happening at a way faster rate. And if you could get in ahead of those other people who adopt it later on and finally see the use for it, you'll be in a great position. Alright guys, this is going to be the conclusion of the video. I hope this information was helpful to you achieving your financial goals. Do me a favor and help the channel by liking, subscribing, turning on those post notification bells, and also checking out some of the other content that we have on the eMoney channel. I'll see you guys in the next one. Peace.